All right, so I talked about the fact last week that I didn't think it was a housing bubble. I wrote a piece on it. I used a bunch of data from Y charts to help me out a little bit.
Anybody push back on you? Probably not, right?
Oh no, a lot of people. Yeah, not at all. Just wait for the 80% decline. You'll see. I got a lot of that, and it'll remind me in 3 years tweet kind of thing. Bill McBride at Calculated Risk wrote a follow up, and I got a little nervous when I saw that he linked to my piece because if he would have gone the other way for me, I probably would have had to change my mind because
You would have said heads. Okay, I'm wrong.
yes, but he asked, "Is there a new housing bubble?" And he linked to my piece. He says basically no. Things are so he looked at the house price index to median income, which is one of the things that really tipped people off before. It's definitely elevated, not nearly as high as it was. He basically says housing prices appear elevated relative to incomes, but still well below levels of the housing bubble. He says, they're high, but lending standards have been solid, and we haven't seen speculation. And someone on Twitter asked, well, what do you consider speculation? And he said speculation would be house flipping, buyers letting homes sit vacant, waiting for appreciation, loose
That's what I
lending.
said. That's what I said. We're not
And
seeing that. These are
he
these are
said,
pri- these are first time home buyers. It's primary buyers. It's demographics and interest rates and COVID. It's not a bubble. Although prices
right.
are, yeah.
Yeah, so he said, yeah, no, it's not a bubble. And he's one of the people that in like 2005 started warning this housing stuff is looking crazy. He basically called the housing bubble, and then he called the very bottom in 2012 when housing bottomed and went. So he's like, not that he is all seeing and all knowing, but if he was a person that would have said no, this is a bubble, it would have given me pause and
By
maybe
the way,
changed my mind.
same like when Jake at Economic like likes one of your blog posts, I always have like a 30 seconds where I'm like biting my fingernails, like is he about to tear me apart?
But the thing is,
Uh,
this is such a thing where okay, a lot of people came back to me and said, okay, but how about this? And they give an anecdote,
well,
and
let
they
me.
assume that it's like that everywhere.
But it kind of is. Can I give you an anecdote?
Yes, but can we have anecdotes and can we have craziness going on without things being a bubble?
Can we say the market is red hot?
It's scalding hot, but I still don't think that means it's a bubble,
Okay,
like an
I agree.
unsustainable bubble. Because
Well, because
bec-
the thing is, a bubble means that you're certain it's going to crash. I'm not certain it's going to crash. I think prices are red hot.
I think because of there's going to be like ebbs and flows. Like interest rates could rise, and that could slow things up a little bit, or more supply comes on the market where people decide to sell after the pandemic, and that could slow things. But the demographic wave coming, these young people aren't going to say, you know what, housing prices are too high. I guess I'm just not going to buy. When you get to a certain age, you buy a house. Most people do.
So we got an email, listener email from Seattle. Based on my current savings for a down payment of $300,000, I am pre-approved for a $1.5 million home purchase, but was hoping to stay closer to $1.2 million. My wife and I looked at houses in our preferred budget, and everything went 2 to 300K over ask. I have a coworker who has put in 5 offers, some escalating 500K offer, and has not won a house. It has been demoralizing, and I don't really want to look anymore. We are spending too much of our free time and emotion on this. This sucks. This really, really sucks. I feel for everybody in this situation. Um, my main question is my options at this point are to one, keep building up a bigger down payment, or two, stretch my budget and buy a forever home now. I favor option one to let the housing market settle out and make a more rational decision. However, I'm worried about getting priced out of the Seattle housing market forever. What the heck am I supposed to do? Does it ever make sense to buy a home for the fear of being priced out? Is this the same as FOMO? By the way, I'll get to this question. I'm in Fort Lauderdale. Uh, my flight got canceled, so I have to stay a few days late. And there's literally a restaurant called YOLO, and it's not a coincidence. Like if you go to the website, it's very much a you only live once thing. Anyway, okay. So Ben, what do you say to this person? I mean, here's what I said.
I wonder how many young people are going to start moving and saying, okay, I'm not going to live in this area and remote work is going to open it up for me. Like that's a hard thing to do. And we've talked about the friends and family thing holding you back and where you live. And maybe that's tough. But at that point, if it's so crazy and you're in the Bay Area or Seattle or some of these places or Miami or whatever that's just on fire, don't you think this is insane? I'm not going to spend my entire budget on a house. I'm moving somewhere else.
Come on, you can't do that.
Why? Yes, you can. You can work remotely. You don't think that's an option now for young people?
But what if this person's whole family is in Seattle?
I'm just saying, if it's between I'm going to spend 60% of my budget on a house or you rent, I don't know. That's the answer.
Well, here's what I said.
Unfortunately.
Here's what I said. I said this is a tough one. I wish I could see into the future to help you. I think the real estate train has left the station thanks to the perfect storm of demographics, low rates, and COVID. Demographics are the primary driver. Just so many first-time home buyers in our age group. Obviously, prices will settle in at some point, but I would be surprised to see prices retrace meaningfully. And if they do, it would likely be due to higher interest rates, which would help your down payment and hurt your monthly payment.
Yeah, but that doesn't have to happen. If there's still people that want to buy there, Waiting for a dip in the housing market is something that barely ever happens.
But that's my point. I'm saying I said I don't really expect,
Okay.
or if I had to guess, I don't think prices are going to come back meaningfully. But I'm saying even if they do, it's only because
And I
interest
looked at
rates have risen.
Yeah, you're right. That affects your
Right.
payments. But I looked in the past at times where mortgage rates have risen and housing prices haven't fallen off. There have been times where it has happened, but it's not a guarantee that if rates go from 3 to 4, that housing prices are automatically going to.
Yeah, but in an environment where housing prices have gone up so much, rising rates will definitely slow this thing down.
I would hope so. I think we probably need some of that.
We
And
do.
yeah, but really, as a first time home buyer, you're right. There's not a good answer right now. Maybe it's just you rent longer, but I'm sure rents are coming up too for some people. I honestly think it's not an easy answer, but moving to a lower cost of living area right now, if you can afford a $1.5 million home, you can move anywhere in the Midwest now and live like a king or a queen.
Yeah, but
Okay.
Midwest.
Yeah. Okay. Fine. But that's what I'm saying. If that's your hang up and this is gonna like ruin your life emotionally, maybe you have to find somewhere else to be that's happier. I'm
Let me
throwing
just
it out there.
on the record. I love the Midwest. Unlike Ben, who has some choice words for us Long Islanders, like I actually like the Midwest.
Oh, I saw a great take a couple weeks ago that basically said if bagels were a thing in New Mexico, we would never talk about them as much just because they're New York people talk about them. And I
Wow,
totally agree with that.
is that another anti-Semitic dig?
No, come on. I'm just throwing it out there. The bagel thing I'll never understand. Props, pizza. New York has the best pizza.
And the best bagels.
I mean, Sbarro is amazing.
All right.
All
Well,
right.
come on, jeez, Ben.
Come on, New York is like the greatest city in the world. I have to like give it back a little bit every once in a while. We would have money managers when my previous job. We'd have money managers come from New York all the time, and they would always look at us like, "Why do you live in the Midwest?" They would always like thumb their noses at us. So this is just me punching up a little. How's that sound?
But I can't stop thinking about your Winnie the Pooh meme post. I thought of one today. I'm not even sure I know what this word means, and I kind of refuse to look it up. All right, I've looked it up. I still don't get it. Orthogonal.
Okay.
Is that just like next to?
Yeah, it seems like something a term only quants use.
Is next to? Is it adjacent? Is that kind of? Did I get that right?
I don't know. I try not to use that word. I stay away.
Uh,
All right, so this is a good one from Bloomberg. Justin Fox had this piece, and I saw this chart going around from a few people. It showed, I didn't know you could even find this, but the Fed has this broken out. The bottom half,
can we trust it?
it's from the Federal Reserve. I think,
Exactly my point.
okay. By the bottom half, wealth for the bottom half, the bottom 50% of people by wealth is now by far its highest value ever, almost $3 trillion. And that's from like a low of like $250 billion in 2011, 2012. Obviously, the housing market crushed people. And this is by far the highest it's ever been. And it's like a straight lineup. It basically looks like the stock market from 2012.
Which is
Um,
interesting because obviously the bottom 50% don't own
and
very
this
many
is
stocks.
the rise over the past 5 years and the past 10 years is by far the highest in the bottom 50%, not the top 1%. So you're seeing.
I didn't get to the article. What's the upshot here?
So the
What's
reason
going on?
is, the biggest drivers is you had this recovering from the housing bust because this demo got just annihilated in the housing bust. You're having late cycle wage gains. So people finally started seeing wage gains in like 2019, right before the pandemic hit. And then, of course, some places are doing minimum wage hikes. Places like, think about Amazon and Walmart and Target upping and Best Buy. Then you got checks from Washington. The problem is the number of the share of wealth is still like 2% of the total. So even though it's come from a low base,
Has the share of wealth gone up at all or no?
yes, it's gone, but it's gone from below 1 to 2. And back in the 90s, it was like 4. So we're seeing a massive improvement, but it's still pretty low by historical standards. So, but good news. We'll take it, right? It's not great. I still think the answer here, beyond like policy stuff, is just get more people to invest in financial assets somehow. Instead, like, can't they offer bigger tax breaks to people below a certain, like, if you make less than $60,000 or $75,000, wherever they want to cut it off at, maybe some of the thresholds they did for the checks. If you make less than this, you get a bigger incentive to invest in the stock market through like tax deferred retirement accounts or something like that. I would love to see that. Okay, so I was driving around this past weekend. I saw a big sign in front of Applebee's, $200 sign-up bonus. I tweeted something out about it saying restaurants and bars are going to be packed this summer, and they're probably all going to.
Like they're giving signing bonuses to employees?
Yes, if you sign up and
Wow.
work there, they'll give you a $200 check. And So they're obviously having a hard time, and I tweeted this out, and a bunch of people wrote back and with similar things. A lot of people, complained about the Fed and saying this is the Fed's fault. But I think eventually this is a good thing because these places are going to have to pay service people more. But I said bars and restaurants this summer are going to be packed, and they're all going to be short staffed, right? A lot of them. It's going to be hard to find people to work. And so the New York Times had a thing about this saying that the National Restaurant Association had staffing levels at full service restaurants that were still 20% below, or 1.1 million jobs lower than a year ago, even though
Wow.
people are coming back to the work. Um, Miles Udland had something about Uber saying, as vaccination rates increase in the United States, we are observing that consumer demand for mobility is recovering faster than driver availability, and consumer demand for delivery continues to exceed our courier availability. Again, they're having a hard time finding drivers. I mean, you can say part of this is the increased unemployment benefits, which I think for some people don't go off until like July or August or September. So that's certainly part of it. I think another part is just people probably found different work. They want more pay to come back to a job like this from the pandemic.
No, it's also a
So
straw man argument. Now that we're on this topic, people who think that these checks are going to turn the entire country into a bunch of sloths who don't ever want to work again.
yes, I got a lot of those comments, and I mean, are there always going to be a few people who say I'm living on this check? Why do I need to work? Yes, but for most people find purpose in their jobs,
Right.
right? Whether they like that job or not, it makes them feel like they're doing. Yeah, so I don't buy that either. I think people are going to come back, but this just means service employers are going to have to pay more probably to entice people to come work for them,
Hmm.
which that's probably fine, right? Maybe they don't need to set a minimum wage, and this will just bump things up for people on the lower end of the scale.
Speaking of which, Stephanie Kelton had a big piece in the New York Times over the weekend. And it seems so. Stephanie Kelton, for people that aren't familiar with the name, are definitely familiar with MMT. She is one of the driving voices behind that. It seems like she's hyper aware and focused on inflation. Like the idea that, again, I'm sorry for the third time I said this, but this is another straw man that people that we like MMT is about just spending and spending and spending. That's like the opposite of her view. So here's a quote from the article: Democrats are thinking about fiscal responsibility the wrong way. They could be on the verge of sparking some unpleasant short term overheating of the economy, in which price increases accelerate and the purchasing power of our dollars fall somewhat. If the final legislation were to grow much larger toward the $10 trillion level many progressives in Congress are pushing, it could send inflation soaring. The president called this plan fiscally responsible during his speech simply because it will raise more revenue than what he's proposing to spend. On paper and according to conventional wisdom, this is a balanced policy. It may satisfy the scorekeepers at the Congressional Budget Office or even earn high marks from deficit hawks. But because these proposed hikes fall exclusively on corporations and more affluent Americans who have a relatively high marginal propensity to save rather than spend, the taxes may not diminish enough private sector spending to prevent the government's own increased outlays from igniting some inflationary overheating, especially if Congress does go way higher. So then she says these are the questions we should ask our leaders, and the ones they should be asking themselves is not how will we pay for it? So again, spending is not the right constraint, it's inflation. And she seems to be hyper focused on it.
Right. And I still come back to the fact of with the demographic stuff, I think we're going to see this short-term burst in inflation. I think it's going to go down. I think that's where we are.
I'm with you. I'm sorry to just read. I just think this is so important. So I just want to read one more quote. She said, if Congress and the White House want to be responsible stewards of both society and the US dollar's value, then rather than focusing on taxation of the rich, they should prioritize and supply exactly what it would take in terms of real resources to electrify the nation's power grid, repair every deficient bridge, give caretakers a living wage, upgrade our railways, and deliver clean drinking water and high speed broadband to every home. How many people will it take to do all of that work? How much steel, concrete, and fiber optic cable? How many tower cranes and other kinds of building equipment will be needed? The list goes on. So her point is that just by paying for this, by taxing the rich, that is completely missing the forest for the trees. Like, even though some of his supporters might like that, that has nothing to do with the real constraint, the real worry, which is not the deficit, it's inflation.
Right. And guess what? Most most of the rich people will figure out how to sidestep a lot of those taxes anyway, right?
Right.